Today, folks, call me Jerome Powell, strap me to a rocket, and shoot me to Mars as I am diamond handing this beyond all reasonable expectation performance as the S&P 500 is up 26% almost year to date. The S&P TSX on the Canadian side of the border, if you slap on that juicy dividend yield, is almost exactly in line with the S&P 500, which is just mind-blowing, and all boils down to me and many of you probably outperforming as I am up to almost 350K with my cash position. I have been buying super aggressively. We're going to break down the positioning in my TFSA, my RRSP. We're going to look at the market movers this week as the government is even giving us a tax break, which is crazy here in Canada. But if you are on a path to financial independence, if you damn well one day want to retire early, go down there, hit that subscribe button, join me on that journey. And if you want a little bit extra, go hit the link in the description below, kylelivingston.com, to join me directly as we hang out with 6-7 figure investors. I reveal my wife and I's portfolio and so much more in between, because if we dive a little deeper into this, one of the biggest milestones I hit this week is my RRSP, where I hold SCHD, actually hit over $100,000, which I'm super grateful for. This is something that I've been trying to achieve for a while, and I haven't been able to contribute any more to my RSP this entire year, so it got here on its own. And I am ever more bullish on this ETF, where a lot of people are probably bearish because the performance has been lackluster, but it's actually been a little better than you might think. I'm going to explain why, but I think we're just starting the rocket ship for the interest rate recovery play. This literally follows in line with the day they started cutting interest rates, just like in the Canadian economy. And because Canada's been more aggressive on interest rate cuts, we've actually seen outsized returns directly correlated to it. So I am still going to sit here patiently. Though I am underperforming the S&P, I think that there's going to be some catch up here again as we see further interest rate cuts. And speaking of VDY, I bought it super aggressively this week between the wife's account, my account. We just been loading up on this because it has been a relative smaller position. We've been trying to scale to at least 20% of our combined portfolios. As of today, I have 1,022 shares. I mean, we are talking about up 10% after I took massive profits on Tesla, pivoted that in there for better or for worse. I'd have been in better off position if I was in Tesla still, but we'll talk about that as we get into the latter half of this video. But if we take a look at VDY, I mean, look at this. As soon as Canada started cutting the interest rates, this thing just went up insanely. In fact, if you tap on the dividend, which I'm sitting on like a 4.5-5% yield, we'd actually be in line with the, the S&P 500's performance. But you do have to keep in mind that this is kind of skewed performance, because if we take a look at these together, it actually looks like VDY has outpaced SCHD. It looks like, it's doing exceptionally well, and a lot of Canadian investors would be celebrating. But you have to keep in mind the Canadian dollar has been getting absolutely devastated, and you can't live in a market environment where you don't look at your global purchasing power. I am somebody that has 80% of our net worth in the US markets, or 80% of my stock portfolio, I should say. And when you take a look at the comparables with VFV to the rest of the stocks, VFV, for those of you that are in the know, this is a Canadian stock that you can buy that converts the S&P 500's VOO to the Canadian dollar automatically in the stock price, which will show you the converted performance, which, keep in mind, if the Canadian dollar starts to do well, you will see lackluster or like less performance than the S&P would typically offer. But right now it is up 32% because the Canadian dollar has been getting absolutely wrecked. And you could add that several percentage points of performance to SCHD as well, and I would actually be outpacing VDY. So as a Canadian investor buying US assets, it's been one of the most prudent things that you could have done coming into this year, and has offered like really outsized returns for Canadians. So this is kind of disappointing because VDY has lost actually a lot more than this return. If I was to take my Canadian dollars and go to the US or go look at global purchasing power, right? It sucks. It really is not a great thing that needs to stabilize and start to return to a normal. I don't like seeing huge fluctuations in our Canadian currency. Now, outside of that, you will have noticed too that I have been buying Google. The wife and I have decided that it is a good time to start cost averaging into this one and make it our second largest stock position within our portfolios. And between her accounts and my accounts, which if you want to see our combined accounts and how I manage my family's wealth, again, you can go down to kylelivingston.com, that link in the description below. We own about 60 shares combined right now. It's not a huge amount. We need to get quite a bit more to get it up to our meta size position, but still I'm down about 4.4%, and I have no worries with this at all. And the reason I have no worries is because I think all the tumultuous expected future is priced in. I am making a statement that I think Google is trading at a 50% discount. It should be closer to a $3 to $3.5 trillion market cap. It has the highest net income of any business on the S&P 500. It should be up there with Microsoft or Apple's market cap value. But if we take a look, I mean, this is a company that is seeing a huge recovery, again, in its net income, $26 billion on the last quarter. Insane. The revenues have been incredibly stable, 15% revenue growth, and they've been purchasing back all of their shares. I don't know what more I could look for in a company. If you just didn't understand the drama, you'd think this is a buying opportunity of a lifetime, because right now there's just too much uncertainty around what the DOJ is going to do when the fines come into play for their monopolistic behavior with Apple. There's a lot of concern around the future of their search. A lot of these concerns have been alleviated because I don't think the DOJ is going to attack them in a way that would detriment shareholders dramatically. At least this will probably continue in court for a while. The date for that is coming up in April. So we will have to wait till April of next year, I think, before we see any like material gains. But in the meantime, I think Google's going to keep crushing. I think they're going to keep posting great numbers, and there's so much future expectation for their growth, their growth vectors, and just their new businesses, that it's underappreciated in the current market value as well. If Tesla can trade in the $1 trillion range and have nothing completed, no revenues really coming off their technology, their robo-taxis, I don't know how Google can trade at such a discount when they actually have a functioning robo-taxi today. Doesn't mean Tesla can't come in the future and do something incredible, but right now Google's the market leader. Now, I sold Tesla as we followed this through, on the pop. I bought it at really good prices. Probably should have held on maybe a bit longer, but again, I don't trust what's going on here very much. Their earnings are getting better, and it's likely with all this hype, if the earnings continue to get better, the stock will keep performing well. But this is all in the back of hype. There's no factual reality. I know Chris from Dumb Money, I think, is leveraging this based on the pull forward valuations of robotics, but that's not me right now. I couldn't stomach buying it here as a long-term hold until something starts to make sense. It is purely a hype stock that trades at valuations that go beyond even the likes of Nvidia right now. For a company that has very minimal single-digit growth, the margins are starting to get a little bit better. If you take a look at gross profit, it has been increasing slightly. But again, this company does not deserve 100 times multiple right now when you have a company like Nvidia that is actually trading for a fair value for the growth that it has. I mean, think about the rocket ship growth that Nvidia is on right now. How can Tesla even come close to trading at a value like it is when Nvidia is probably the biggest growth beast imaginable? In fact, Tesla has been quadrupling, tripling up there in the last couple of years, their capacity for these H100 GPUs. And Nvidia is seeing all the benefit, right? I mean, this growth is actually truly jaw-dropping to me. But my concern with Nvidia is that this growth will only sustain as long as AI continues to be this powerhouse, which we're starting to run into some brick walls. There's some speculation that it's not scaling, compounding the way everyone thought. It's kind of like going to the gym and working out. Eventually you reach your maximum gains and you can't really add any more gains on. We're not seeing huge improvements in AI, even though we're doubling up GPUs and we're doubling up the data, we're not seeing it double up in performance. That's what a lot of people are speculating on right now. And again, I love owning this through the S&P. I couldn't own this as a long-term hold just personally because I still think we're going to run into a wall where these companies are going to start producing their own chips. Even if they're slightly worse in performance, it's still way cheaper. And you're going to run into a parity moment where the chips are going to start getting purchased at parity with what they're able to produce. I don't know when that comes. It could be 1, 3, 5 years from now. The company could continue to grow in the meantime. I don't know. I don't know enough about it to want to own it, but I am still absolutely fascinated and marveled by the insane growth that we're seeing here. But I'm glad at least in the meantime I can own it through the S&P 500. It is now the largest position at $3.51 trillion, the largest company in the United States. And I still keep justifying my Google position when I look at its net income of $19.3 billion. It still has to get to $26 billion just to reach parity with Google as I kind of reach into my bias. And I'm like, how is Nvidia so big and Google is so small in comparison? But nonetheless, really cool. Biggest moving stocks this week. I'd love to know what you think about them because on the Canadian side of the border, we've been getting some benefits, and I really wanted to mention this because this was a big news article this week as Trudeau, the Liberals, trying to solidify the election that's coming up next year, which they're not going to win, but they're fighting for it, is they're going to cut GST and HST on a ton of items over the holidays, just for a couple months, I believe, on food and beverages, everything from alcohol to candy and fruits and vegetables and things like that, kids stuff, child's diapers, car seats. Honestly, all they really need to do, and what everyone keeps saying, is just cut carbon tax. Why are you going to give us tax breaks here when you could just cut carbon tax and all these prices would come down anyways? It truly is going to be a carbon tax election, and it's surprising at how well energy companies are doing on the back of weaker oil prices. Considering, the whole discussion around carbon tax, I'm shocked at how well C&Q and Enbridge, all these companies are really doing on the back of oil that's been relatively suppressed and has been kind of stuck in this range. It's still really interesting as the TSX again continues to lift off, and I'm hoping next week is a pivotal turning point as we get Canadian bank earnings. And I'm still betting, as I continue again to buy aggressively into VDY, that we are just seeing the launch phase for these banks, which is why I really want to make sure I own a decent chunk of them just in case this liftoff continues and we actually start to see excelled performance, which we've seen some articles and some analysts coming out of BMO thinking the valuation, the setup, the lower interest rates could really drive outsized performance even still next year in the TSX. But again, don't get shrouded. We do need to see our dollar stabilize. We do need to see, I think, new government. I think we're ready for a new government. I'm usually not that politically, involved, but unlike the US where it was so divisive, in Canada, I feel like most people generally agree on that fact. But I'll pass that question off to you. Again, I'm not trying to divide my audience here by any metric. I'd love to know what you're doing with your portfolio, what stocks you're buying, and what you think in that comment section below.